Hello folks, it is Sunday, December the 4th. It is almost 10 p.m. Eastern Time. I want to take a quick look at the currencies as part of understanding what's going on in precious metals, because obviously gold and silver have been rallying and are continuing to rally tonight after a very strong week last week. So wanted to see what the currencies are doing, because when we're trying to understand the precious metals, we've got two significant factors that influence prices of the metals. Obviously, that's the US dollar primarily, and then secondary, we've got interest rates. And so both the dollar and interest rates have been declining, backing off, and the metals have been rallying as that has been occurring. So we're only going to look at the first three currencies in the interest of time. So euro, yen, and the pound. And of course, that makes up more than 80% of the basket of currencies that make up the dollar index. So here's the US dollar in the monthly time frame. We can see that we shot up to the 113, almost 114 level before this pullback started. I was expecting a bigger move. I thought we were going to go all the way up to even 121, the high back from 2001. Obviously, that hasn't occurred. If we look at this pullback from a Fibonacci retracement perspective, that's these light pink lines. Let me expand this. You can see that we've already pushed through, or the dollar has already pushed through the 38% level, which suggests that level is not going to act as support. So from a Fibonacci perspective, we'd be expecting the next target level, which would be 50%. Let me get that out of the way. Now, from a horizontal support and resistance perspective, obviously we've got this level. Actually, it's never been tested as support. The dollar is currently testing it as support now. And so we'll see if this level is able to hold as support. Obviously, it acted as resistance back in, that was December of 16. And March of 20. That level acted as resistance. Got a little bit of resistance here in April of 22, and now we're pulling back, testing that level again. Coincident with that, we've got the upper median line of this the Schiff pitchfork as a potential support level. We can see in MACD that MACD reached the level of the prior high in MACD and then rolled over. It's currently rolling over. We can see that in the histogram rolling over. Albeit, we have to keep in mind that MACD is still in bull mode, suggesting that the primary trend remains upward. And stochastics are still quite elevated. So potential for the dollar to turn back up at this level, we'll have to see what happens. Let's look at the weekly. Here in the weekly, price penetrated what could have been a support level. That's this horizontal gray bar. We can see there was resistance. We did test it as support, tested again as support, and got a bullish doji candlestick there. That was mid-November, but then price rolled over again and then penetrated that potential support level and currently is below that level. Now we've got another minor support, potential support from these three candlesticks back in mid-22, potentially has support. And then this is the third median line extension of this Andrews pitchfork as another potential support level. MACD still in bull mode, but obviously on a sell signal and headed lower. energy is very low based on stochastics. So that's the weekly. Here in the daily, again, we had this horizontal support resistance level that has failed. Price, or the dollar, also pushed down through the 200-day moving average, tested it from below, and that test failed. And so the dollar currently appears to be headed lower. MACD in bear mode, suggesting that the primary trend in the daily time frame is downwards on a new sell signal from a few days ago, energy very low. So based on these three charts of the dollar, reasonable to expect that this move to the downside will continue. We do have to acknowledge that MACD is extremely oversold in this time frame. So what I'm looking for, I'm looking at prior lows in the MACD, same concept we saw in the monthly, only instead of highs in the monthly, now we're looking at prior lows here in the daily. And what we can see is that MACD has already pushed below the levels of those several prior lows. And so very oversold from a MACD perspective. So wouldn't be unreasonable to expect some kind of bounce based on MACD. The euro monthly time frame obviously had a very strong move in November, and now that upward move is continuing in December. MACD in bear mode, but appears to be headed up mid-level on energy or stochastics. And so bullish move. We can see that the euro found support down at the lower median line of this Andrews pitchfork, bounced, got a very strong move higher, and reasonable to expect that that move is going to continue at least for a bit. Let's look at the Fibonacci. So Fibonacci retracement, we're right at the 38%. And so that could be a little bit of a resistance level. And if this is no more than a counter trend rally, we could actually see the euro roll over at this point. So that's interesting. So we are at the 38% retracement in the monthly time frame. Here's the weekly, and just offhand looking here at the weekly, I would expect that price is headed to this target up here. It's about 108. It's the upper median line extension of this Andrews pitchfork. It's also coincident with this horizontal support resistance level. So that gives us a target at about 108. MACD is still in bear mode, but headed higher, obviously, and sharply headed higher. Stochastics or energy very elevated. So here in the weekly time frame, I would expect this move in the euro to continue. Notice that we also penetrated the 10-week moving average and made it support. Notice this price action around the 10-week moving average. So we're testing it as resistance, and the sellers took price back below, tested it as resistance again, and closed just at the 10-week moving average. And then last month, we were able to, I'm sorry, this is the week. Last week, price, or the euro, was able to turn the 10-week moving average into support, and now is headed higher. So I would expect higher prices in the euro. Same thing here in the daily on the euro. Got a new buy signal on MACD a couple of days ago. We are getting overbought in MACD. We've pushed up above the 200-day moving average. We've got a target, sorry for scooting around here in the chart, up at this would be the second median line extension of this modified shift pitchfork. Give us a target at, call it 107. So here in the daily time frame, target of 107. Bullish action. These candlesticks got a big body candle closing near its high, followed by a doji, and now we've got another green candle. Appears to be headed higher in tonight's session. So bullish action in the euro in both the daily and weekly time frames. Here we've got the yen in the monthly time frame. Obviously a sharp move higher. And I'm just noticing, the first thing that comes to mind when I look at this chart is that's a counter trend rally. And counter trend rallies don't have staying power. They typically, you get a sharp rebound and then price rolls over and continues in the direction it was headed, which of course in this case would be down. Let's back up and look at the monthly in the euro. Yeah, see the same thing here. This looks like a counter trend rally, just based on its impulsive. So we get this sustained downtrend, just plodding steadily lower month after month after month, and then we get this big bounce back. That's a counter trend rally. And so it's going to, I would expect it to roll over at some point. And again, we're at the 38% retracement level, which would be a good point for the euro to roll over, and the dollar's at a potential support. It wouldn't surprise me, folks, if we're about to see it may take all of this week, but I wouldn't be surprised to see the dollar about to turn back up. Let's see, so we talked about the euro and the daily. Let's talk about the yen. Oh, we were on the yen. Yeah, counter trend rally. That's certainly what it looks like to me. Let's look at the Fibonacci. We can start from there. And again, we're at the 38%. 38% retracement on Fibonacci, which is coincident with this. We've got this prior low as a potential support resistance level. And we can see, so support, we got a little bit of support right in there. Price is actually pushed up above that level, and actually it's pushed up through the 38% as well, but it could still roll over and push lower from there. So again, counter trend rally in the yen, I would say that may be about to roll over. Here in the weekly, notice that price is right at the 10-week moving average, stopped at that level last week. I mean, this is a bullish move, but it was stopped by the 10-week moving average. MACD in bear mode, obviously on buy signal, energy very elevated. So we could move higher, but it wouldn't be surprising to see it roll over at this point either. How's that for helpful? Here in the daily time frame, again pushing up into the 200-day moving average, which could act as a resistance level, would be a good place to roll over if that's what price wants to do. MACD on a buy signal in bull mode, and very, very overbought, extremely overbought, even based on that. Scooch back here, get it all into the chart. Yeah, see, if we go back and we look at this prior high in MACD, we're there now. And so again, this wouldn't be if the yen rolled over at this point, it wouldn't be surprising. MACD is very overbought. It's at the level of the prior high in MACD, while price is at the 200-day moving average. And so anyway, I'm maintaining my position so far that this would be a good point for the dollar to reverse back to the upside, and the euro and the yen to reverse back to the downside. This is the yield on Japanese 10-year bond, weekly time frame. They continue to maintain their, they're targeting this quarter of a point level, not going to let interest rates go any higher than that. They're trying to maintain their soft or dovish monetary policy. And of course, the primary way they do that is by printing up yen, fiat currency. All you get, turn on the printer, print us off a couple more million, and then go out and buy bonds, buy the dollar, so anyway, they don't get to have it both ways. They can't maintain this rate on interest and at the same time have a strong currency. And so based on the fact that they're maintaining this fix on their bond, that would be another reason to expect that this rally in the yen is not going to be sustained. Let's look at the pound, this monthly time frame, and again, sharp rally after an extended downturn, downward movement. That just says counter trend rally to me. Let's look at Fibonacci. We're at the 50% level, potential to roll over at that point, albeit price has pushed strongly through this support level. It didn't really act as resistance. We can see support, 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 and then it failed. Didn't really act as resistance on the way back up, and price has pushed through that level. But again, one of the attributes of counter trend rallies is that they are strong and quick. They're impulsive, and so on an impulsive move, maybe it's not so surprising that it was able to push through that potential resistance level. MACD in bear mode, suggesting that the primary trend remains downwards. In the weekly time frame, price has pushed up through the 10-week moving average. This is a very strong move, but again, counter trend rally. I mean, that's just a very sharp move higher, which again, that's what counter trend rallies do. They move quickly in the opposite direction, and that's exactly what we're seeing there. MACD in bear mode on a buy signal, energy very elevated. From this chart, would be reasonable to expect the pound to continue higher. Where was it? We looked at it. It's at the 50% fib level there. Probably get the same thing, should get the same thing from there. Let's look in the daily. So this is the pound in the daily time frame. It's just kind of for the last, it's at 3 trading weeks, channeling up the, it's a shift pitchfork. So finding support along the lower median line and then resistance at the median line. So could continue pushing higher up into that resistance level. Has broken above the 200-day moving average, which of course is bullish. MACD is very overbought. Again, if we look at these prior peaks, MACD is up at that level. So MACD is very overbought. Wouldn't be a bad place to roll over or at least take a pause. And so primarily on these monthly charts with some backup evidence in the lower time frames, I would not be surprised to see the dollar turn back, head higher, and these other currencies roll over and head back lower. So, but again, it'll probably take all of this week for that to resolve, and that's all I got on currencies. I wanted to take a look at those before we look at the metals. I will talk to you soon, folks.